Hello dear students, welcome to the third year BCom Advanced Accounting new topic called Single Entry System. I hope you might have been studied in the 11th or 12th standard the single entry system, the statement of affair method, in which you have been already studied what is the meaning of accounts from incomplete record. Basically, in India, there are very small and medium scale proprietors as well as the businessmen, those who are not maintaining the books of accounts. There are two reasons why they are not maintaining the books of account. Number one, either they don't know the accounting system, or number two, they don't have a proper training regarding how to record the business transactions, and therefore they are just giving the single effect of the transactions. For example, you might have been seen so many panwalas, or you might have been visited to any grocery shop holder where he just keeping the record on a single sheet that he has been sold that amount of goods to this person. Suppose if he has been sold goods on a credit basis, then he is having that red color book in which he is just mentioning the name of the person and the amount which has been owed by him to the proprietor. So all these systems of accounting are called as a single entry system. Why I am saying single entry system? Because while entering the name of the person, the businessman or the proprietor, he had just recorded only a single effect of the transaction. He has not given the second effect. Now the question is why he has not given the second effect. The reason is he don't know the accounting principles as well as the double entry system of bookkeeping, and therefore this type of accounting is called as an incomplete records, or we say accounts which are maintained on a single entry system. Basically, in our home also, our mother, father, they are also maintaining a diary wherein which they are recording all the household expenses on a monthly or day by day basis, wherein which the amount received from the salary or any other sources, as well as the amount spent on the different expenses, and the balance left they are recording. So this recording is nothing but this is a single entry record, because they are not considering the second effect of the transaction. So in businesses also, there are so many small traders or the proprietors, those who are also maintaining the same type of book of account. Now the question is, after completion of your third year BCom, suppose if somebody comes to you and he's just wanted to get the accounts completed from you, because he has recorded all the single effects of the transactions and he has all the records of his transaction, but now he wants to get the loan from the bank, and for that purpose bank will ask him, give me your profit and loss account and balance sheet. So at that time he will felt the need of accounting and the profit and loss account and balance sheet. There are so many other reasons also why the people are not maintaining the books of account. The reason is, if they are maintaining the proper books of account, there might be a fear in the person's mind that he has to pay the income taxes. Therefore, there are so many persons there, those who are not maintaining the proper books of account. But basically, even though whenever they wish to take the any advantage from the financial institution like the banks and other things, they have to prepare the accounts on a double entry system basis. So in that case, what will be our task is, our task is whatever the system, that is single entry transactions that he has recorded in his books of account, or we can say from the incomplete record, we have to just convert these single entries into the double entries. So therefore in today's topic we are going to cover how to convert the single entry into the double entry. Now, for conversion of single entry into double entry, you need to follow certain steps. And for following these steps, first of all, you should able to prepare the cash book. Now, why I am saying cash book? The reason is, whenever the businessman he is recording the transactions, or the person one who doesn't have the knowledge of accounting, what he will do, he will just simply write all the transactions on the basis of cash, like from where he has been received the cash or where he has made an expenditure. He doesn't know the classification regarding asset, liabilities, then the expenses and incomes, but he will record all the transactions in a single book called as an cash book. So therefore it is your duty that whatever the transaction that he has already made, from that transaction you are supposed to prepare the cash book. Now why you should prepare the cash book first? Because from the cash book you will able to understand the amount of cash he was having at the beginning of the business as well as at the end of the business, and even though meanwhile from where he got the cash and where he has made an expenses on a cash basis. So all these details that he has to prepare on the basis of cash book. So once the cash book is prepared, the second thing he has to do, and that is he need to open up the debtors account. Now why debtors account? Businessmen, they never maintain their accounts on the basis of cash basis, but also they are going for accrual basis. Accrual means sometimes the businessman, he is selling on credit also. So whenever he is selling on credit, automatically the name of the person comes, and that name of person is called as an debtor. That we have been given goods to him and he has to pay money to us, but he has not been paid yet. So therefore the total debtors account should be opened. Number 3, as the debtors comes, automatically the bills receivable account will be also opened, because even if he has not been given any cash, he will give the acceptances to us. So whenever he is giving acceptances to us, the bills will be received. So here, to know the opening balance of the bills receivable and closing balance of the bills receivable, acceptances given or the endorsements made by us, all these details will be available from the total debtors account. Now after preparation of the debtors account, we need to prepare the total creditors account. Now similarly, as we are purchasing on cash basis as well as on credit basis, so whenever we are going into the market and purchasing few goods from the market on a credit basis, automatically we are promising them that either we will pay this money after few time, or we will give you the acceptances on the basis of bills payable. So here, to understand or to know the amount of opening and closing balance of the bills payable as well as the credit purchases that we have been made, this total creditors account should be prepared. Similarly, there should be a bills payable account. This account will be prepared to know that how much acceptances we have given to the creditors. Then we need to prepare the stock account. Now why we should prepare the stock account? The reason is, the businessman, he should able to know that how much was the quantity when he was selling the goods, how much quantity he has purchased during the year, and how much quantity is left at the end of the year. So to know all these things, you need to prepare the stock account. After the preparation of stock account, we need to open up the revenue expenses. Revenue expenses means the expenses which has been made for the purpose of business only, and for performing all business activities. So all these expenses, it should be recorded on the revenue expense account, so that total expenses which has been incurred on the business, that will be calculated, and that will be again transferred to the profit and loss account or trading account. After that account, we need to prepare the revenue incomes account. Revenue income means the income that we have been generated through either rendering services or buying and selling of the goods or services. So in that case, how much is the amount of revenue that we have been received, or from the person from whom we are in receipt of this person's money but yet not been received, all these information will be getting from this account called as an total or the revenue incomes account. After preparation of the income and expenses account, here we need to prepare the fixed assets account, because even though he might be a small businessman or a proprietor, but for running his business, he might have been maybe owned some sort of fixed assets like land and building, plant and machinery, or sometimes a car, vehicle, delivery van, or any sort of asset like furniture, fixture, fitting. Whatever assets he has been owned, that asset should be recorded, and it should be properly depreciated as per the Act of Income Tax Act 1961, and the opening and closing balance of this asset should be founded out with the help of fixed asset account. After the preparation of fixed asset account, we need to find out the opening balance of capital. Now the question is, sir, how to find out the opening balance of capital? To find out the opening balance of capital, we need to prepare the opening statement of affair. Opening statement of affair means what? It is a statement wherein which the balances of all the opening, means at the beginning of the year, whatever the balance of cash as well as assets and liability, that will be just written on a piece of paper, where asset minus liability, the difference will be considered as an opening balance of the owner. So here, with the help of opening statement of affair, we will find out the opening capital. After the finding of the opening capital, what we will do, we will just close down entire ledger accounts, and from these ledger accounts, whatever the closing balances that are left from these accounts, we will prepare the trial balance, and from that trial balance and I hope you all know that it is very easy to prepare the trading account, profit and loss account and balance sheet. Now in the next part we are going to study the specimen of cash account and whatever the accounts that I have been already mentioned to you in this lecture. So all these account specimen I am just showing you to know from this particular account what would be the amount or the figure that we are supposed to calculate or find out from the given records. So here as you can see on the screen, it's a figure of cash book. So this cash book will help us to know or to find out the opening balance or the closing balance of cash, as well as cash sales or cash collected from the debtors. So here the cash account will be prepared in the same form like the cash ledger account is being prepared by any business organization. So wherein which the debit side will consist of receipt of cash and the credit side will consist of the payment of cash. Next account that we are supposed to prepare is total debtors account. In the debtors account also we are supposed to find out the opening balance as well as the closing balance of debtor, and similarly bills receivable, dishonored or the credit sales figure. So these are the few items that we are supposed to find out with the help of this total debtors account. Once the debtors account is prepared, then we need to prepare the bills receivable account. Now from the bills receivable account, we should either able to know whatever the amount of total debtors or the bills receivable, dishonored or the endorsed. Now next account is creditors account. Now with the help of this creditors account, we will find out either how much amount that we have been paid to the creditor, or how much amount is left which is being payable to the creditor, or instead of paying cash to the creditor, how much acceptances we have given, that we will find out with the help of creditors account. After that we should able to prepare the bills payable account. So here you can see on the screen, it's a specimen format of bills payable account, wherein which the debit side of bills payable account will consist of payment made against the bills and the total creditors in case if some bills are being dishonored by us, and on the credit side the balance of bills payable and the total creditors, that is bills payable that we have given acceptances to the creditor, that balance will be funded out on the credit side of the bills payable account. After that we should able to prepare the revenue expense account. Now revenue expense, as I already spoke to you, that these are the expenses which are incurred on the day-to-day activities of the business. So whatever the expenses that we have been made, that all expenses should be recorded, and at the end of the year these expenses should be transferred to either trading account or profit and loss account, and if any balance is left, that balance will be also either maybe it is paid in advance or maybe outstanding. Afterwards we should prepare the revenue income account. Revenue income, it means the income that has been generated by way of performing the business activities, either trading or rendering services. So here these revenues, incomes that are being received or receivable, that should be mentioned in the revenue income account. And after that we should able to prepare the fixed asset account. Now in case of fixed asset account, it is very easy because debit will consist of the balance of the opening balance of asset, as well as credit will be considered as a closing balance of asset. And meanwhile, if in case any asset has been sold, then on that asset you might have been incurred any profit or loss on sale, depreciation has to be charged. In case if there is any addition in the asset, or in case if there is any depreciation on asset, so all these points should be considered, and then fixed asset account should be prepared for each type of asset. Afterwards we should prepare the stock account. Stock account has to be prepared to find out the opening or closing stock, or either cost of goods sold or the purchases of goods. Once all these accounts are prepared, you should just try to prepare the trial balance with the help of the closing balance of all these accounts, and these trial balances should be recorded in a debit and credit form. And with the help of the trial balance we can able to prepare the trading account, profit and loss account and balance sheet, so that whatever the transaction that has been kept by a businessman on a single entry basis, or the incomplete records of the businessman, from that record we should able to convert these single entries into the double entry with the help of the accounting principles. So I hope this lecture is more useful for you, because in the next lecture we are going to study how to convert the single entries into the double entry with the help of some numerical example. If you feel any doubt or any query regarding this particular video or lecture, I request you to comment me in the comment box, and thank you for your patience listening.